Alright everyone, welcome back to my YouTube video. I'm Kabe XM and I'm here to document my journey on YouTube. Right now I don't have a great following and many may not take my content as to be crucial, but just know if you hit that subscribe button, you like, you get notified, you don't miss. And I know if you're a struggling trader right there and you are seeing this video, this content will benefit you and we shall develop together. So I'm right here to talk about the top-down analysis, and I want to show you why many traders lose and why the top 1% get it, and actually it's helping me out, and I'll try to show my records on what I do. So let's drive in the power of the top-down analysis. Alright, when we start from the application of the top-down analysis, we are going to analyze some pairs like BTC/USD, and let's apply because we keep it less talk and more action. So when you look at this, we shall go to the weekly time frame, and you're seeing I'm in the weekly time frame. In the weekly time frame, we want to see the directional bias of the market. What do I mean by the direction bias of the market? I either look for the uptrend or the downtrend. I only look for this, and if it's a consolidation such like these consolidations, these are the consolidations that make equal highs and equal lows. They indicate indecision in the market. So if I see that in the higher time frame, I'll definitely leave the market, because the top-down analysis works like a Google map to give you direction and to give you the purpose for the market. So you cannot trade what you don't know. You need to know what the market's doing. These are the footprints of the market. So after getting the direction bias, like in this trade, we're seeing right here the market made higher highs, these ones that I anchored, and higher lows, higher highs, higher lows, higher highs with a higher low. It's making a higher low right here. So what do I know? The market is now in a retracement phase. Market moves in two phases. It moves in a push phase, retracement phase or correction phase, push phase, correction, push phase, correction. So the market now is in a correction phase. So I wait for the correction phase to end so that I enter in the push phase. So when I drop down to the time frames, what do I do? Let me first delete out this one. Sorry, this. Delete this. Also delete this. Right. So we shall now drop to the daily time frame. Since we know now the direction of the market, we go to the daily. And in the daily time frame, what do I look for? I'll look for this. In the daily time frame, I'm seeing a retracement phase, and I'll take this to be in a sell, though it was in a consolidation before. But now, since it broke structure right here, and those two who don't know breaking structure, the meaning of breaking structure, if the market breaks a higher high or a higher low, it's called a break of structure. That indicates a continuation in trend. So when you look at the daily, the market broke structure right here. It broke this. This was a low, so it was broken. This showed continuation in sales, and right now daily bias is in sales. So what do we look for? We are now looking for we shall look for the targets, like the point of interests. They can either be the higher highs or the swing lows, the swing highs, or order blocks. So per now my POI is an order block in the daily. So this order block, I expect market to come to this order block, then it will reject it to continue in its phase. Remember, we saw the market in the weekly time frame. Let's go back a bit. In the weekly time frame, the market is in an uptrend. You're seeing it right here. Uptrend retracement phase. Let me try to draw it here. This is what we are seeing. Uptrend retracement phase. So what will end the retracement? I expect the market to end to that order block, this one, so that the market reverses to its direction. So what will I do? I will wait for the market to react to that order block in the daily, so that I will enter the market right away. We only here to react to the market. We cannot predict the market, so we only react to the market. This top-down analysis enables us to understand the direction bias and also understand the footprints of the market. So after knowing this, what do we do next? We are seeing the market has reached to this order block. What shall we do? Being patient, we shall have to wait. So in these markets, patience first. It's part of psychology, and psychology actually is the main part that makes money. It's always 20% strategy and 80% psychology. So I wait the market to react to this order block. Then if it reacts positively, we shall have to buy BTC USD. And my targets, I will put targets. Targets are always the swing highs and the swing lows. This is my target 1. This is my target 2. And this will be my target 1. This is target 1. Target 1. Let me try to take it. This will be target 1 and target 2. So if the market reacts positively to this order block right here, we shall have to buy. And in the next video, I'll explain my entry criteria. So in this top-down analysis, we are able to see the footprints of the market, the movement of the market, so that we minimize losses we make in this market. So when the market reacts to this order block, I'll right away go to the 4-hour time frame. This is called the top-down analysis from the higher time frame to the lowest time frames. When I go to the 4-hour time frame, what am I seeing? The market has reached to the zone, and what will I look for? I will wait for this market to react to this order block, and I want to see reverse. I want to see the market reversing. So if the market reverses like this, if it gives me signs of reversing like this, what will I wait for? I will wait for a structure like this. I will wait for the market to break right here. If the market breaks this, if the market comes, it reverses and breaks this, what will I look for? I will look for a POI right here, and the POI will be, I will want to see this structure right here. I want to see this. If the market comes, this is what I want to see. The market coming, breaking this high. If it breaks, I wait for the market to retrace back. I want it to retrace, then I'll enter. So I will also need an order block right here to enter. This is the top-down analysis. It enables you to get whatever you want from the market. I'll enter from this order block. What will be my confluences? I will wait for these confluences right here. So the market reverses, I will go right to the 1 hour. I will do this in the 1 hour. In the 1 hour time frame, it's where I'll get my entries, and this is what I will want to see. So if the market breaks this high, I'll wait for the market to do this right here, and I will have to enter. So what are the confluences? I want confluences such as